Hi there, welcome to Grain TV. It's Thursday, January 27th, and another mixed day in the markets. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, corn losing 2.5 cents a bushel, beans losing 6 3/4, closing below $10.50 for the first time in nearly 2 weeks. And wheat in Chicago bucking the trend, closing 2.5 higher. Some of the news was good today, some of the news was not so good. Let's start first with the bad news, and that is the ongoing struggle between U.S. and Mexican relations that is starting to heat up a little bit. Obviously, the new administration is talking tough about building a wall around Mexico, getting Mexico to basically pay for that wall. President Nieto from Mexico is expected to make a visit to the U.S. at the end of this month, beginning of next month. He said today he is calling off that trip in light of the rhetoric that is going on. So I think overall there's been enough sort of in this week's first week of the administration to keep traders sort of on the defensive about where we stand with our political situation and how that affects ag trade, in particular when we look to Mexico, when we look to China. These are dominant buyers of some of our grain products, and so the fact that we're seeing some tough rhetoric around those trade partners is somewhat concerning to the market. In addition, of course, you have the concern about the RFS and what will happen under the new administration. Other news out today, there was some export activity by Egypt's GASC. They did solidify a big deal of wheat, 400,000 metric tons, all of that going to Russian suppliers, although in the round of offers there was some hard red winter wheat offered out of Cargill, and so that got passed on because it was still a high price, but it was at least favorable to see that they're at least putting in some offers from the U.S. as our prices have gotten a little more competitive versus where they were this time last year. Other news out today, Argentina's Buenos Aires exchange said that they expect the soybean crop there to be 53.5 million metric tons. That is pretty much in line with expectations. People have been talking about 52 to 54 given the rain event that really flooded a sizable chunk of the country there. Traders have been saying about a 10% drop seems about likely, although it's still got some chance to recover. So, 57 is what USDA had pegged. We've been talking 52 to 54, and 53.5 is what the Buenos Aires exchange came out with. So, not a terribly different number than what people have been looking for. The good news today was export sales, and let's take a look on the chart here where we landed with the weekly export sales from USDA. Both corn and wheat coming in well above analyst expectations. Corn on old crop coming in 1.37 million metric tons. We had been expecting 700 to 1 million metric tons. Beans was a little light, although hitting the midpoint of the range for old crop, 539 versus 450 to 650 expected, but we did get 126,000 of new crop. Wheat was the real shocker, coming in at a marketing year high, 853,000 metric tons of old crop wheat, and on top of that good number, 103,000, nearly a 1 million metric ton week, which is unheard of in the wheat complex as of late. So that was certainly positive. We did see a bounce after this report released. We did get wheat up about 5 or 6 cents at one point, but overall the market was still struggling with selling pressure, and we saw beans in fact close down at the lows, close below 10.50 for the first time since January 13th. Wheat continues to sort of see some underlying support, some of that tied to the slashed winter wheat acres that we saw from USDA on January 12th, but also sort of ongoing lingering concerns about the dryness in the plains. We did have some wet weather in the plains over the last week or so, but when we look at the drought monitor from University of Nebraska just released today, no real noticeable changes in the situation in those key hard red winter wheat states of Kansas, Oklahoma, and Texas. Look at the latest drought monitor. You can see Oklahoma very much fully engulfed in drought here. Keep in mind that the western half is really the key growing area for winter wheat, and that is not quite as bad as the eastern half, but we're not seeing much improvement here. And of course, the southeast still struggling as well. When we talk to some of our meteorological friends out there, Planalytics in particular has said that there is the potential for the spring to be fairly dry in these ongoing drought-stricken areas. Let's take a look at what Planalytics has said they expect for weather patterns in February through April, getting us out of dormancy in the southern plains in March. What they see is higher than expected temperatures on the left here in those yellow and orangish areas, and worse than normal precipitation. So according to our meteorological friends, Planalytics, they do not see an end to this drought anytime soon as we get out of dormancy. So there's still potential to keep this market on the upside. And speaking of the upside, we talked about this a couple weeks ago when we saw this double bottom form. This is on March wheat from our Grain Edge trading platform. You can see the double bottom that formed here over a couple month period. And what you can see is bouncing off those 393 lows, forming that neckline at 420. That would set us up to go back and retest the highs at 447 established in mid-October. So it seems like a stretch to get there now, but certainly we've got some things stacking up in the wheat market's favor. Lower acres, continued dryness, and today's strong export showing marketing year high may lead us to get back to those 447 highs. So keep that in mind in your own marketing strategies going forward. As always, if you'd like help and learn more about how we can help you in your own situation, visit us online at grainhedge.com, take a demo, get our trading platform, get our iPhone application on your phone, and also get our morning comments and technical alerts. Have a great day. We'll talk to you tomorrow.